What would you say to someone who is sitting on the sidelines because the headlines are telling them that mortgage rates are too high?
But when rates were extremely low, buyers often faced bidding wars.
Who might be a good candidate for this strategy?
It may work well for a buyer with stable income who has found the right long-term property but wants to reduce expenses during the first few years.
Welcome to another edition of Mortgage Minute, where we help home buyers and home owners understand what is happening in the mortgage and real estate markets, and more importantly, what it could mean for them. I'm Jeff Harrison, and joining me today is Art Alvarez from MortgageWorks. Art has more than 4 decades of experience in the mortgage industry, and one of the things I appreciate most about him is that he doesn't just look at the headline numbers. He looks at the entire transaction and helps buyers understand how all the pieces work together. Art, welcome back.
Thank you, Jeff. It's always good to be here. And you're right, the interest rate is important, but it's only one part of the home buying decision. Sometimes people become so focused on the rate that they overlook opportunities in the price, the seller's motivation, the closing costs, and the overall structure of the transaction. That's especially important in the market we're seeing right now.
Let's begin with the headline that has many buyers concerned. Recent economic reports show that average 30-year fixed mortgage rates have been running somewhere around 6.6% to 6.8%. What are you seeing, and how should buyers interpret those national averages?
The first thing buyers should understand is that a national mortgage rate average is exactly that, an average. It includes many different borrowers, loan amounts, property types, credit profiles, down payments, and geographic areas. The rate available to an individual buyer can be higher or lower depending on that buyer's specific situation. At MortgageWorks, we currently have options that may compare favorably with those national averages, but every loan has to be evaluated individually. A buyer's credit score, down payment, loan program, occupancy, property type, and whether the rate includes discount points can all affect the final numbers. So I don't want someone to look at one advertised number and assume that is automatically the rate they will receive. The better approach is to review their complete financial picture and compare the available options.
When buyers hear that mortgage rates are at their highest levels in more than a year, their first reaction may be, maybe I should stop looking and wait. Is waiting always the right answer?
No, it may be the right decision for some people, but it is not automatically the right decision for everyone. The problem with waiting is that we don't know exactly what will happen next. Rates could come down, remain in the same general range, or move higher. Home prices could also change. Buyer competition could return very quickly if rates decline. A buyer has to look at what is available today and decide whether the complete transaction makes sense. That includes the price of the home, the monthly payment, the amount of cash needed at closing, the condition of the property, and how long the buyer plans to own it. The question shouldn't only be, what is today's rate? The better question is, can we structure a transaction today that makes sense for my budget and my long-term goals?
That brings us to the other side of the market. Buyer demand has slowed, home price growth has cooled, inventory has improved, and some homes are staying on the market longer. How does that change the conversation for a buyer?
It may give the buyer more negotiating power. During the extremely competitive market a few years ago, buyers were often competing against multiple offers. Some were offering more than the asking price, shortening inspection periods, or agreeing to terms that strongly favored the seller. In that environment, asking the seller to contribute toward closing costs or a rate buydown was often difficult. Today, conditions can be very different. Some sellers may have had their property listed for several weeks without receiving the offer they expected. Others may already be purchasing another home, relocating for work, or carrying the expenses of an empty property. That doesn't mean every seller will negotiate, but it does mean more sellers may be willing to have the conversation.